Hello everyone and welcome to Business Incorporated. We're live to you from Channel's global headquarters in Lagos, Nigeria. I am posting on the program today and a warm welcome to everyone at this time on the program. Let's get started with Nigeria's 8th over-the-counter FX futures contract of notional amount of $266 million is due to mature and settle today. We'll have that later as that data from the FMDQ OTC Securities Exchange in about an hour from now. Meantime, the OPEC Secretary General, Nigerian-born Mohammed Bakindo, says implementation of the all-output cuts that deal is on track. That was agreed last November. Meantime, uneasy lies ahead of Ghana's new president as he groans over the economy he inherited from his predecessor, John Mahama. Now let's get started. We're tracking the markets here. 3 major markets on the African continent: Egypt to the north, Nigeria to the west, and South Africa are in negative territory today as we speak. Those figures you see there for Nigeria, South Africa, and Egypt were about 2 hours ago. Right now, the Egyptian market is down almost 2%, losing its year-to-date into almost a negative territory of 0.46%. The South African market was about 1% in the red, 12 o'clock Nigerian time as we speak. It's about 1.12% in the red. The Nigerian market trying to hang on there to about 0.2% negative, now reading 0.17% on the all-share index. The Kenyan market finished slightly 0.2% Tuesday at 124.93. Now, let's talk about the Nigerian foreign exchange market. A lot of news around this market since Monday when the central bank announced a new set of regulations to ease liquidity. On Tuesday, the financial regulator sold a total of $370 million at the spot market for travel, medicals, and school fees, as well as placements into forward FX windows 30 days and 60 days. Then the Naira advanced against the US dollar by 400 points at the street market on the news of the special FX intervention. And today you heard the FMDQ OTC Securities Exchange announcing that the 8th over-the-counter FX futures contract of $266 million will mature and settle. That is expected to happen before the end of the trading day. Now let's get some updates on today's trading day with Ayodeji Oyeniyi, who is an FX dealer with Rand Merchant Bank here in Lagos. Ayodeji, good afternoon to you, and thanks for coming through to us on the program.
Good afternoon, and thanks for having me.
We appreciate this. Now, bring us up to speed. How the FX market has been performing today, going by Tuesday's special FX interventions of the central bank.
We've seen the pressure subside a bit on the back of the intervention by the CBN, as you mentioned earlier, and that has not necessarily changed the rate at which we're trading. So, Interbank is still quoting around the 305. 305.50 levels at this point in time. Nothing has happened today. So what we saw yesterday was majorly from the CBN. That has, improved the level of confidence in the system, but in terms of rate, it's not really had so much impact.
Well, what is the word on the street right now regarding the near to medium term outlook on the FX market?
Well, I think it's more positive now than maybe late last week, especially with CBN putting the word out there and showing that they can action that. So that is positive. But the other side to look at is, as we see more of this, it would actually be better by the time. If we see liquidity from other sources, that would support the market confidence. At this point in time, going by the current pattern, it will still be the CBN that will remain the major supplier of liquidity in the market.
All right, thank you very much, Ayodeji Oyeniyi, FX dealer at Rand Merchant Bank. Enjoy your day. Let's move on to the Middle East, where the Dubai share market rose at intraday Wednesday after a bolder Arab tech rebound sharply upon receiving approval from the securities regulator to boost its capital base, while Saudi chemicals producer Tasni jumped on the news it will sell a major facility. Look at the numbers from some of the major bosses across the region, all in the green this Wednesday. Let's fast track that to Europe, where German energy big cap company RW reported 5.7 billion euros loss for 2016. That was one news that rattled the market. Meantime, Germany is riding the crest of latest economic data, and Conrad Bilsen, who is the DWTV financial correspondent for Channels Television, is standing by at the German Stock Exchange in Frankfurt, and we started this conversation. Conrad, from one bad apple spoils the whole basket. We're looking at Greece, Turkey, and maybe Portugal. Would you say there's more than one bad apple, quoted unquote, in the European Union's basket for the finance chiefs to fix?
Well, Bosun, there are really a lot of problems to fix for the finance chiefs and for the governments of the European Union and for the Eurozone. Turkey is not one of them. The country is not a member of the European Union, so the economic and political problems that Turkey is facing at the moment is something that, the governments who are members of the European Union sort of have to face from the outside. You mentioned Portugal and Greece. Of course, the debt situation of those countries is not satisfactory, and it is, at least in parts, not considered to be sustainable. So there is reason to worry. From the point of view of investors, of course, the major question is whether they have to be concerned about a potential default. And at the moment, they have not. The mechanisms put into place in those countries and in the European Union and Eurozone after the last debt crisis of those countries are functioning, they are working, so that despite all the political flaws, how, solution finding works in our union, at the moment, there is no question of a potential default or a haircut, another haircut for the debt holders of countries like Greece or Portugal.
Well, but despite these pockets of problems, as it were, for the EU, Germany seems to be firing on all cylinders, going by the latest slew of economic data. Talk us through the latest inflation reports that we have today.
Well, the inflation data which came out is about all of the Eurozone. In January, consumer prices rose at an annual rate of 1.8%. That is nearly where the European Central Bank defines price stability. Still, it's not very likely that the European Central Bank starts scaling back its general